justice. Welcome everybody to Wall Street Reporter's next Super Stock live stream, June 23rd. We are back with NexTech NEXCF. Of course, the whole idea of our program is we bring you those stocks which have that 10x to 100x upside potential. So companies going after massive multi-billion-dollar market opportunities at a key inflection point and with multiple catalysts in place to ignite that shareholder value. So with that said, Evan, welcome back.
Thanks, Jack. Great to be back.
Absolutely. So, there is the reason we have you back. So, I mean, you were just on, was it 10 days ago, not even 2 weeks. But the reason is, look, in the last 7 to 10 days, there's been a massive increase in investor interest in NexTech. It's almost like, early 2020 happening all over again. The volume is exploding. The stock is up 70, I think it was up almost 75% just in the past couple of days. I mean, so it's almost doubled. And I think because the story of the transformation of NexTech is really starting to resonate. I think apparently the market likes what it's starting to see right now. So let's the idea today is we want to get the details on the big things ahead.
Yeah, I mean, we've been working really, really hard as a company to create value for shareholders. That's always been the focus. We recently announced that we're essentially pulling the cash out of our e-com business and reinvesting, doubling down in our AR ties 3D and our CAD to Poly. And also, we announced the spin out of our Metaverse platform, which is ARway. And so I think those things combined really position us for this Web 3.0 that's happening globally. That's really the next mega trend, where we saw NFTs and blockchain explode in starting in 2019, 2020, really went into overdrive 2021, and those technologies are just forming. Our technology is built on the back of a lot of the tech that's out there that's just coming to market, whether it's Apple's AR Kit or Google's AR Core, and even Microsoft's Anchors. We're building our next generation tech off of big tech's platforms that they've launched. And it really is opening up a massive opportunity for NexTech and obviously for investors to take advantage of really this pivot that's happening. I don't think pivot's really even the right word. I think
Paradigm shift.
paradigm shift. Yeah,
and it's not
something small compared to a paradigm shift.
Yeah, because it's the crazy thing is it's not even an exaggeration. This Web3 thing, because originally we were referring to it as metaverse. It's really kind of all related. But this Web3 is really gonna be. It's sort of like I think big. I don't know if it's bigger than the original .com boom, but definitely as big as the explosion of social media. You remember, so in 2008, right? 2000. When did this Twitter, Facebook really start to scale? 2008, roughly.
Yeah, I always think cloud computing, right? As
AWS, Amazon Web, yeah.
Microsoft's cloud computing, AWS. Those have really driven this transformation. 5G is also a piece of that puzzle. AI, ML. All those technologies are converging, and and I've talked about this really starting in 2019, but it's actually now.
I remember the first presentation you talked about this, and I was like, "What is this?" I didn't even know what AR was. But I was like, I mean, vaguely I know VR, whatever.
Yeah. But back then, the metaverse today. Back then, I was calling the fourth industrial revolution.
Yeah,
that's what I was calling it, and now it's just this metaverse kind of thing that everybody talks about. But NexTech is uniquely positioned to benefit from all this new tech. And when you look at the metaverse, There was just a little thing that came up that said Lowe's is now getting into, yeah. So NexTech is at the forefront of all of these new technologies, whether it's 3D models and augmented reality experiences for e-commerce, the metaverse, which Paul Duffy is going to speak to in a minute, which is our newest technology platform
The
that
maps.
is now being commercialized and brought to market, so that we can start to see that generating revenue. Yeah, the maps, augmented reality, wayfinding. I mean, these are transformational technologies, paradigm shifts, whatever you want to call it. They're very, very big in terms of market opportunity. And NexTech, I mean, our market cap now, even after we went up 70%, it's only like $50 million. It's
Yeah.
tiny.
You know
It's
the
a drop in the bucket when you think about the massive opportunity, which is in the it's hundreds of billions, and some people will even go and say it's in the trillions. And all we need to do is really get our a niche, and really
and
define
it's and
ourselves.
it's but the most important thing is that it's starting to scale now. All of a
It's
sudden, like,
happening.
and we're going to get into this. Yeah,
Yeah.
the clients, the blue chip brands are really getting on board. What you're doing with Web3, the 3D models. But I just realized something, Evan. Like you mentioned cloud computing, but like we don't even talk about cloud computing anymore because we've sort of gotten so. But
It,
the cloud computing thing is like is the business. I don't know. Is it 500? I don't know. Is it $1 trillion business now?
it's
But
huge.
it's become so huge, and we take it for granted. But the cloud computing, which didn't exist, I don't think it existed 10 years ago, right? Or 8 years, it didn't
Just
really exist. It was like, it was very early, but
yeah.
all of a sudden now the whole thing runs on cloud, right? And the same, that's actually, I think, a great metaphor for how the what you're doing with the 3D models is going to impact e-commerce, because right now, people are so used to the flat 3D images, but now when they have the flat JPEG images,
Yeah.
but now when they go to the 3D, which is what you're doing, and once this goes on, all these sites, it becomes like, you know, you know, everybody's gonna have to everybody's gonna have to do it, because once you see some of the big leaders really start to
Well,
lean in on the
you
3D,
say once, yeah,
they're gonna have to, just in order to compete, they're gonna have
they
to.
are already leaning in. There's no, the train has left the station, right? So, we talked about this on our last, I think, show with you, that Amazon just came out with a virtual try on for shoes. That Amazon is now all in on 3D modeling, that Amazon is all in on augmented reality. Everybody that's watching this needs to understand that the market leaders lead the market, right? And so that if Amazon is doing it, everybody is going to be doing it. It's not like Jack and Evan are saying this is what we believe. No, 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 no. It's way beyond Jack and Evan. This is just us communicating to the investing public that this is happening. That's why NexTech is in this business. It's not just Amazon, it's Target, it's Kohl's, it's Shopify, it's Crate and Barrel, it's Walmart, it's Lowe's. They're all in it. And when they're all in it, that's the top, layer, right? These are all the biggest players. Everybody else is forced into it. They have no choice. It's like, it's like a new bat comes out for in baseball, and the
It's an arms
Yankees.
race. It's an arms race. That's
Yeah,
what
it's an
it is.
arms
They have
race.
to. They have to.
Yankees use the bat. All of a sudden, they're hitting more home runs than everybody else. You know that whoever's making that bet, they're going to be getting phone calls from every sports team. I'll even use like steroids as an example. I mean,
Or the sneakers, right? Or the steroids.
sneakers. Yeah, the
Right. The
sneakers, right?
shoe. That's not the shoe.
Shoe.
Yeah.
Is that once you see, the leaders um, wear a certain uniform, or certain equipment, or in this case technology, take hold from the big tech companies. And let's be clear on this: they have been working at this for years. This isn't like half baked. Oh, they're going to do it today and then stop tomorrow. No, no, no. They've been at this testing, testing, testing. The ROI is there. The conversion rate goes up 93%. The returns go down 40%. That is driving the massive adoption. And, make no mistake about it, it's a massive, massive shift. And what we're building at NexTech is automation, AI, ML driven model creation. And the model creation piece is only one part of it. The other part of it is, you got to have high quality models. So QA is a big piece, quality assurance. The models have to be essentially picture perfect. Yeah.
And I think, Evan, the big thing I think just is the key is to be able to do this at scale. So if you
Yeah.
have 10,000, and this is why NexTech is right at the epicenter, because from what I understand is basically you're the only game in town when it comes to doing 3D models at scale.
Yeah, it's not just that, it's the 3D models at scale, but there's a lot to this tech. It's an end-to-end solution. It's creating the 3D models, but then you have to integrate with other people's websites, with other platforms. You have to be able to track and measure the interaction, the click-through rate, the add to cart. There's a lot of tech built into our tech. So the 3D models is really just the tip of the iceberg. That's just that gets you in the game. But there's a lot, all these big players that we deal with, they have a lot of needs and a lot of demands, and we are meeting them. And that's kind of positioning us for this next generation of growth, this transformation from a 2D to a 3D world. And it doesn't end. 3D models are really just the gateway product, right? To get you into the metaverse. Then it becomes, okay, what can you do with your 3D model? The e-com shopping experience, to be honest with you, is probably the lowest rung on the ladder. It's the simplest use case. But I think once investors start to understand all the different use cases in the metaverse for the 3D models, they'll start to understand the value of what we are building here. It doesn't end with e-com. That's the beginning. And once we build the model, the use cases are going to continue to increase. The value of that model is going to continue to increase, and the value of our platform is going to continue to increase. And that's really why these 3D models are so important to us and so valuable to us. And we don't sell them. We essentially license them. We own these 3D models and we license them to our customers. And then we get recurring revenue, that SaaS revenue that you spoke about. And if they want to take the same 3D model that we created for them, and let's say, they have a Shopify store, for instance, Jack, and they pay us, let's say $15 per month per model. And then we say to them, hey, would you like to move to, let's say, Amazon? And now all of a sudden, they could pay us another $15 per month per model.
It's per platform. It's per platform that they're on, they're paying?
It's essentially per platform. Let's say they're going to use it in our metaverse creation app like ARway. They would have to pay again, right? Like these are completely separate platforms. I mean, you're on the web. If you're on the web, that's one platform. The web, is essentially a platform, let's call it. But if you're on Amazon, that's a walled garden within the web, right? That's a marketplace, completely different. It's a completely different business model, completely different. And it's actually, different tech to do that. And if you want to put it in the metaverse, right, in a spatial map, it's different tech again, right? So it's not like that one model, we get paid for once and that's it. No, we own the models, and wherever you want to take it, you want to take it into a different platform, a different walled garden, you're going to pay for us. You're going to pay us again and again. And so there's an enormous amount of leverage that we're building into our business. And, these things take time.
It's a snowball. It's like a snow. And here's the thing. I think it's, we got a lot of new people coming into the story right now, so I want to kind of get into kind of a recap of some of the key milestones that you've achieved in the last months, which are the setup for what's going to be in the next 6 months, and then we're going to talk about some of the three parts of the story.
Sure.
But I think it's the big thing, which is undeniable right now, is that this thing you're talking about, this snowball, like it's really like people watching the news flow in the last week, they're seeing it's accelerating. There's more and more brands coming in to the the 3D, the NexTech 3D models. It's like, and there's a pipeline from. Can you talk about, because I think that's the thing people need to understand is you're really the pipeline of new business is like really growing dramatically, which is gonna and that's not even the real money is not gonna kick in probably for I don't know how long before it takes them a while to try. Like
Takes a while, yeah.
yeah,
Yeah, we have right now, we probably have 30 quotes that are out for signature at any given time. So if you think about that as a startup, so we're signing up deals, but we have like 30 quotes that are out there, right? So, that means we've demoed the tech. They've demoed it. I mean, the customer has played with it. They've asked questions back and forth with our sales guys. We've typically create like a sample model for them so they could see the quality of their product. We typically do that. After all of that, they say, okay, how much will it cost us for 50 models, 100 models, whatever it is, 25 models, and a quote goes out. Those quotes, we're waiting for signatures on, right? But this is this is our pipeline, right? So we build that pipe. There's always quotes out there. Right now, there's about 30 of them, which is substantial. That's a lot of quotes. And again, this is still the early days. This is just the beginning. This is really just the
it's
beginning for us.
it's
And
it's
so,
like the cloud computing in 2010. Yeah,
yeah,
right before it exploded
yeah,
1 year later.
what's also interesting, again, as we've mentioned, is we're getting repeat orders. We get a lot of, I would say, accolades. Our team is amazing, meaning customer service. We offer white glove service, which really keeps our customers happy and coming back. And so, it's just getting started, Jack. It's an exciting time. Our sales guys are excited, and really, from my perspective, it's really about, like you mentioned earlier, our ability to scale, right? So, how do you scale? How do you produce not 1,000 models per month or 10,000 models? How do you do 100,000 models in a month? That's a lot of production. We're not talking about like, plastic parts in a factory, boom, 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 boom. No, we're talking about having 100,000 models in a month. And so if you think about that, that's a massive amount of models. The only way to get there is automation. The only way to get there is through AI. And we have that tech in-house. We are still perfecting it. Our CTO, Nima, is working on that. And we think that by the end of the year, we will be able to have a fully formed platform that can scale at a level that nobody has seen before, and nobody can compete with. It's still, we're building up towards that, but it's coming. We're locked in, and the customers are lining up. So in my mind, it literally is inevitable. It's just a question of time.
So we got a bunch of questions coming in. I want to get into the audience question because that's really the key thing. So and also we have a special guest coming in who's gonna. Well,
Yeah.
I want to keep it a surprise. But we do have a special guest, and we have audience questions. So basically, let's kind of recap because again, we got a lot of new people coming in right now, and probably in the next weeks ahead. So when they watch this video, I want them to really understand what's going on here. So there's really, let's talk about this. So there's really three stories inside of NexTech. You have, it's not just the transformation story, which people kind of see on the surface. There's really three big stories. So number one is you have the acceleration of the Web3 business, which is the more e-commerce brands coming on board by the week. I mean, it's really starting to snowball every week more and more. We're seeing this. This is what you've been talking about, and that's going to be, I think, people are really going to, I think, notice this probably in the next 3 or 4 months, and then it's going to, like, once they see the revenues from that, like, really like show up in a big way, that's going to make a big impact. I think that's a big catalyst. Also, the other thing is apparently the market really likes the fact that NexTech is exiting that legacy e-com business to become pure play Web3 company with the
Yeah.
big margins, the big SaaS Web3 margins. Geez, I'm thinking like you should have done this a year ago.
No, no. I mean,
But apparently it's like the market loves this. It's
timing is everything, Jack,
Yeah,
right? And it wasn't time. I mean, we had to perfect our technology. Remember, we were using it as a sandbox.
right.
We were testing, testing, testing. We were really understanding the customer journey. We essentially have inside information on how e-com businesses operate.
This is the
That
big thing. Yeah, yeah.
that is
This is
the
the secret ingredient
that's a
that's been
secret.
the edge. That's
That's
been the edge for NextTech in this. This is the key thing now.
Yeah, and so, we learned as much as we could. As discussed, there's a lot of supply chain issues. We can't even restock, and it was kind of like, okay, our 3D modeling business is taking off. The e-com business is starting to struggle. Now's the time to just kind of suck the capital out of the inventory that we have left, reinvest that in to our highly scalable, fast growing metaverse suite of products, and spin out AR way, and off we go. I mean, I feel great.
No,
Honestly,
I tell you, I think it's a genius move because look, I don't think people really understood it all this time, but apparently now I think all of a sudden they realize, oh shit, this is so basically you were using that e-com business essentially in a way where you can go to big brands and say, look, we're not just a tech company selling you a service. We also we eat our own cooking. We're doing this. We're
yeah,
even selling like mundane stuff like vacuums and this pet stuff, whatever. We're using this to drive sales, and we're doing what is it, 20-30 million in revenues. That's not a joke, right? So, but it's the problem is it's a low margin business, which people the e-commerce, especially in that area. So you're getting rid of it. That's great. And now number three, the other big thing which people are starting to realize, which I don't think anybody kind of understands quite the extent of how big this is. You've been hinting at it, is really unleashing the built-in value inside of the NexTech technology assets. So these value creation catalysts are in the stock right now, and only one of them is just announced, which is the spin out of the AR Maps business, which is monetizing the metaverse, and that we're going to be talking about more. Right? And I think you mentioned on one of the live streams that potentially there's $1 billion of value to be unleashed.
yeah. I believe there is. I think look. We just talked about it. The CAD to poly technology, the ability to create 100,000 models in a month or more. That's worth $1 billion. That is a monster. That is something we're building, that we're developing. The ARway acquisition that we made, over the summer, we're spinning out now. I mean, there's an enormous amount of value in that. I'm not going to put a number on it, but let's just say that the competitors, which would be Niantic, their value is $3 billion. So, and our tech is, toe to toe, head to head, as good. I'll let Paul really speak to the comparing it to other platforms in the market, and that's a very disruptive spatial computing technology that we are bringing to market. And none of this is even predicated on the AR glasses coming out,
Oh,
which is another
we've
catalyst.
forgotten all about it. We've
I
forgotten. We haven't
know.
even talked. We haven't talked about this in like forever.
Has it It hasn't happened yet. We've talked about it in the past, but it is coming. And when that comes, we will be perfectly positioned. Our technology's value will only go up. And so I when I say $1 billion in value, I really mean it. I think that there is that much value locked inside of NexTech. We need to unlock it. We need to build that value, but it's there. It's not like I got to go out and acquire another company. It's here. And so we just need to develop the tech, bring it to market, create that opportunity in the market, and that the $1 billion, in my opinion, will show up in value. And so, it's not like I'm saying that we're sitting on $1 billion worth of gold. Well, maybe I am saying it's kind of like a gold
Yeah,
mine.
yeah, it's
You got to go in and mine it, but it's sitting there. And so that's kind of like that.
how different? How actually, you mentioned Niantic as a comp, so they have a $3 billion valuation, right? What do they do? Like, are they in the same exact business, or like what are they doing in terms of like how much? I'm trying to get a sense of
So
like,
So from a revenue standpoint, they're still living off of their legacy business, Pokemon Go, right? So Niantic is still living off of that. So a lot of that valuation is tied to that. But if you go back and you look at Pokemon Go, it's the same spatial mapping, spatial computing tech that we now have built. And so while they're living off of that legacy tech, they've now upgraded their platform for the metaverse. They're now getting ready, or maybe they're in market now with their Lightship platform. They acquired one of our competitors, almost a direct competitor, a company by the name of Eighth Wall. They just acquired Eighth Wall literally a couple of months ago. And so when
for
you
how
look,
much? How much? Do you know what was the
it was a
valuation?
private transaction, so I don't know
Mm.
how much, but I've heard it's 100 million kind of range. So, but if you think about it, Jack, think about what I'm saying. Here's a company worth 3 billion. NexTech, has a Eighth Wall they just acquired, similar company to our Metaverse suite, 3D modeling and human hologram platform. Then you have spatial computing, again, similar. We're worth 50 million
Right now, it's the
right
market cap
now.
today.
Yeah.
Yeah,
So
yeah,
they're worth 3 billion, we're worth 50 million.
yeah.
The race is on. Obviously, we have to play catch up, right? They're way ahead of us. They just raised 300 million, so they have a war chest. So they're the bigger player in the market. But the thing is historically they have focused exclusively on gaming, and so we're not focused on that. And just to be clear, the opportunity is massive. There's enough room for two players.
Your focus is the e-com business. Basically, the
Well,
Web3 for e-com.
yeah, that's on the 3D model
Oh,
side, but
you're talking about the spatial
spatial, yeah,
the
spatial computing.
mapping, which is the AR maps business,
Yeah,
monetizing the meta. Okay, that's the thing with which Paul is going to be talking about. That's that. Okay,
yeah.
so yeah, actually, okay. Now I was referring. Okay, so I was referring to like the 3D model business, like in terms of competitors, like peers in that space,
Oh, okay. Just
valuation
yeah, just in
wise.
that space, there really aren't many competitors. There's like 2 or 3 companies, but they really don't have an end-to-end solution, and they don't have the secret weapon, the CAD to poly. They do not have the ability to scale, the production of 3D models.
But you know what's interesting? What's interesting? It's kind of just clicked. I don't know why I didn't get it before, but okay. So the spin out, the AR Maps spin out, that is actually that's the direct. Most I don't want to say direct, but a pretty good comp is this Niantic.
Yeah,
essentially.
no, I would say, I mean, we'll let Paul speak to
Yeah,
that
okay.
because there's a few, but yeah, I would say yes. That's
So
the
that is going to be, I think it's going to be very interesting for the market when this stock spins out, because that's going to be like a pure play on that kind of monetizing the metaverse, and it's really interesting what he's doing there. But I think the other thing is this is not the only potential spin out. I think you've kind of hinted at there's other technologies in
yeah,
house,
yeah,
and NexTech has always been very kind of like I think what's exciting about the company is that you're always willing to take a chance on new tech. It's like that is the true business of technologies is to constantly innovate, take chances, take risks with new things. Some things work, some don't. But if something really connects, it could be hundreds of billions of dollars. I mean, really. I mean,
yeah,
it's the
yeah.
more risks you take, the bigger it's at some
Yeah,
point.
risk,
This is
risk reward, risk reward. I mean,
yeah.
yeah, I mean, in a lot of ways, I've taken a VC approach. When you think about the spin out, ARway is going to be the template, but
Mm,
there is a plan to do additional spin outs to create value for shareholders. And so I'm still working on it, but the key is that we want ARway to be a success, which I think it will be because it's going to launch with a market cap of less than 10 million Canadian.
oh, it's very
So
compelling. That's like
it's going to be
60
like,
million US. That's
yeah, it's
for
going to be
a
8 million. And so whoever gets in, like again, all the NexTech shareholders that own NexTech stock will get free shares in the spinout ARway. And, with such a low market cap, you can see a dramatic return. I mean, for it to go from let's say to equal the next tech market cap, that means that stock would go up 500, 600%.
it could eclipse. I think actually, Evan, I don't want. I really
Yeah,
do
don't
think
say
it
it.
could eclipse next tech. Because it's just a new thing, and it's much easier for the thing to move. Like just
Well,
because
here's the thing. Here's the thing. When you say eclipse next tech, let's be clear.
valuation wise,
Next is
yeah,
going to be the single largest shareholder in
right.
the spin-out.
No,
So
no. I mean, like in terms of the first, let's call it a couple
so
months.
so think about it like this. If the valuation of that goes to, let's just use
Let's
this,
say 100 million. Let's just say 100 million, just
say
for argument's
100
sake. Yeah.
million. NextTech's value, just based on that, will be its current market cap, which is like 50 million. So our market cap will be something like half, whatever that goes to. If that goes to a billion market
Add
cap,
it plus, so it's 50
plus, yeah, I'm
million plus.
saying just in
Yeah.
the shares, just in the common stock that we'll own, our
Mm,
market cap could be, as if that's a billion, we
yeah.
would have like 500 million, let's say, in our of the value of our stock. Nothing to do with AR ties 3D
Yeah.
and our other
You know,
businesses.
I think also you
So, Jack, I just want to make a point here is that the more successful ARway is, the more inclined I'm going to be to do more spinouts, right? Because if our valuation goes up on the spinout, I'm going to just be like, okay, that's a great formula for continuing to increase the value of our stock for our shareholders, where they continue to get spinout shares for free. I mean, I love this business model. I mean, think about it. You own one stock and you keep getting more shares for free
it's the unicorn laying more unicorn eggs.
in more spinouts that it's like it never stops to give you a return on your investment. That if you buy our stock today at 50 cents, some of these spinouts can be worth more than our current share price, right? And so from my perspective, as an investor, if I'm an investor, I love, and I am an investor, right? I'm the biggest investor in NexTech. I love the fact that I'm going to get spin out shares. And I want all of our investors to get spin out shares. And,
Oh,
if
we
we
should also add, originally NexTech
was a spin
itself
out.
was a spin out, which people look. Well, let's use. I mean, could that be a potential, a prelude to the future? Because NexTech was a spin out. I think it started trading at, like, was it 20 cents or
25
something?
cents, 25 cents.
25 cents.
Yeah.
Is that Canadian? Canadian, right?
Yeah.
Canadian or
This is
American?
a template. This is a
Yeah.
template. When I spun out NexTech from the previous company, it was the exact same structure.
Okay, so basically, people got the NexTech shares at 25 cents Canadian, which went to $10.
Yeah.
Right? I think $10 and a few cents, right? $10,
Yeah.
within 2 years, two
Yeah.
years of that, right? So that
Yeah.
was like a 40. Was that a 40x?
70x.
70x, 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 and now it's happening again. So I mean, okay, listen, I don't want to sound too promotional because we don't want to, like, because
Yeah.
it's a Canadian. Yeah,
Yeah.
there's the Canadian
Let's
regulations.
bring
I
on.
don't want to
Let's.
sound,
Yeah.
but the reality is this: the reality is there's value to be unlocked, and we know for a fact that, look, when you have strong comps like you have with this Niantic, other companies, if a stock starts out at 5 million market cap, there is a sort of a I don't want to say vacuum, but there's an easy path for new companies to, once they pop out of the gate, to, we have seen in the past
Look,
things go up 10x plus.
they close the valuation
The
gap.
valuation, right?
Yeah, that's what ends up
The
happening.
valuation gap, yeah.
I think, Jack, what we're leading up to is bringing in our next guest, because we're really talking
of course.
about his company. Paul Duffy's going to be the CEO of the spin out. I'm going to be, chairman, and there's going to be an enormous amount of excitement, I think, in the market, and especially by customers are excited, and I'll let Paul speak to that.
Okay, so let's bring our special guest on, and then we're gonna come back for Q&A. We get a lot of audience questions, so let's get Paul. Okay, special guest Paul Duffy, welcome.
Hey guys, how you doing?
Hey, Paul.
Great, Paul. Thank you for
Good.
waiting. We've got,
Yeah,
Like, how much time do you want me to take up here?
as much as you need. As much as you need.
I'm sorry, Paul. Jack likes to talk a lot.
I know.
He's trying
I
to pull you
apologize.
in. Nah, I'm kidding.
It's no problem. No problem. Yeah. Well, why don't we do this? And listening to everything you're talking about, we've definitely put a stake in the ground and are attracting some unbelievable interest. I know we've been on a few earlier presentations talking about early adopter programs, and that's really what I'm referring to. I'd like to, if you could, give me a few minutes just to talk about the market. I'll share my screen, bring up a quick deck, and then I want to really illustrate why we're getting the traction that we're getting right now, because I think you'll see it. Can you see the screen okay? I can't, unfortunately.
Yes. Yeah. Okay. Yeah. Okay. I see. Okay. I see it. And if you just want to go to a full slide, full.
Yeah.
Full screen, full whatever.
Oh, there we go.
Okay.
Did it say market?
I'll disappear. Okay.
So we're good. Okay. So I shared this slide in one of our first introductions, but this is super critical because it speaks to how we are going to literally disrupt this market. What you're looking at here is the technologies that are being used currently inside what they refer to as the PLAN market. That's the positioning, localization, and navigation market. And this is for indoor navigation. So these are sporting venues, hospitals, airports, shopping malls, all forms of retail. We talked earlier, you guys talked a little bit earlier about retail, museums, exhibits, and even trade shows. And today, there's roughly about, I'll just call it loosely, $30 billion being spent on a variety of very expensive and difficult technologies that really do nothing more than provide navigation or wayfinding indoors. And of course, what's really exciting about all this is because we've become so used to Google Maps, Apple Maps, Waze, and other smartphone-enabled mapping, we don't even think about it anymore. We just bring up a map and it guides us. And so when we looked at our technology and how it could fit specifically into this segment, it became very clear that we could totally disrupt this space. Our platform, which is an app, a web portal, and an SDK. It's a complete no-code spatial computing platform for the real-world metaverse. Allows any operator of a property with no capital expense, zero, to go in and literally turn their existing airspace into, for lack of a better term, a rental opportunity. And it sounds a bit nutty, but bear with me. You can go in and you can use your smartphone to create a spatial point cloud. You can put it onto our web studio, happens automatically. You can then create all the locations and touring and navigations that all those prior technologies showed you. But you can do it at roughly 1/100th of a cost. So the fact that there's zero upfront hardware installation and no need to maintain that hardware is just at the beginning an amazing opportunity for us. That's why we're getting so much interest and so many early adopters. But the truth of it is that's just the start, and this is why we will dominate this market. When you think about the fact that you can go in now and create a spatial point cloud within a property's space, first of all, the wayfinding is helpful for the natural outcome of leading you to where you want to go. But what do property owners want? More times than not, they want the rental space or they want to make money within the confines of their building. And so in the world of spatial computing and the metaverse, we can add all forms of 3D interactions, sponsorship, banner activations, and all forms of AR, augmented reality. So we take our ARitized 3D capability, weave it now into the metaverse, and we can provide a full-on opportunity to monetize that airspace. And then the final piece in all of this is that we're able to use location intelligence and analytics to better understand how to serve that market. And so we have literally just been sort of softly introducing this. Remember, NexTech has hundreds of clients in the 3D AR world. We also have hundreds within the events and trade show space. So it's easy for us to reach out to our existing customer base and socialize and gain insights into this. So we've been doing that for quite a while, and it's worked out phenomenally well. But what we landed on is a totally disruptive technology into a market that at the moment has nothing to really compare with. So we can produce the meta maps, we can produce the spatials, and we can produce the location intelligence and the analytics from this whole piece. So how big is this market? Jack, if you think about it right now, our buyers are the operators of the properties that you see here. So you've got everything from retail to stadiums to museums to hospitals, casinos, cruise ships, etc., all the way down the line. Our pricing model and the way we step into this is it's a freemium to start and you move up the grade to premium. And at an average price point of about $15,000 per annum, we've easily got over 1 million ideal customer profiles that we can target. And so that's literally where we're starting. And it's getting super exciting for us. So let me just give you a quick example. Can you guys hear me okay? Still going? I'm gonna go with yes.
Paul, we hear you, yeah.
Okay, good. Sorry, guys. If you look out the back, the buildings behind me, this is this building, literally right behind our office. You go to their website, you can see this floor plan. Our technology will allow you to go into their space and walk through their environment and actually take a complete video scan of their lobby. So on the left, you can see it. It will produce a three-dimensional point cloud, these green dots that you're seeing. And this you can do right now. Take our app, download it, walk into any location, and make a spatial map. As you're making that map, it's ingesting into our web studio. And that web studio will create a visualization of what I'm basically capturing right here. Once I've got that, I can take a floor plan, like I just copied from their website. I can put it into our studio, and I can lay these point clouds over top of it. I can then take that studio, and I can all these orange pins represent locations that are available. So this is basically us completely disrupting the need for Bluetooth, for RFIDs, and all this other cacophony of technologies. And then if I really want to, I can sit there and I can put together a tour. I can start at this door and I can literally drag over an end spot to here. I can give it a name, in this case, shopping and dining. And then I can go in and I can add along that tour any type of content that I want. And then when I'm done, I can press a button and it will basically publish an experience. And I just want to remind everybody, this was done yesterday in about an hour, and there was no coding involved. So this is Hannah. She works with us. She's coming into this environment. She's placing spatially a 3D module. She's walking into where you guys saw that start point. She's picking, in this case, Jacked Up Coffee, one of the coffee shops in the mall. She's selecting it, and now a path will come up. We've anchored a little hologram to show her to say hi, and on her way, it's spatially anchored. You can see some of our 3D content there, and it's going to guide her right over to the coffee shop. And oftentimes what we're seeing here is that our users are basically doing just this. They want a quick hit navigation to get them to a specific location. If we want a wayfind, so in this case, we're going to go look for shopping and dining, we can basically select that. It can tell us how many steps away we are, and you can see in real time that it's actually going in and collecting the number of steps that we're taking. You can see the other anchored objects floating around, and you can see chevrons show up to tell you to turn left, turn right, go this way. It's got all the reinforcement you need to basically guide you along that path. There's one of our 3D objects, and now as I walk through, and we have no real limit to the size of mapping and navigation that we can produce. And everything I'm showing you right now was all done without any coding. And that's a huge benefit. Even if I want to leave the physical premise, the indoor of the building, I can simply walk out and we can still anchor and publish content. Very, very simple. And so it's an incredibly powerful tool to do wayfinding, navigation, and we call spatial or AR activations in the metaverse. Very useful. The final thing I'll show you is one of the things that we are releasing is a location intelligence analytics engine. And this will come out through July as we point release our platform. But this, when we've shown this to our early adopters, this has been complete gold for them. We're able to basically measure and track inside their building all the activation and usage around the experience. And so we know hotspots and heating areas of where people travel to, how much they interact, how long they've spent there, what their dwell times are. And this, from an advertising, a branding, and even just a positioning of where to place stuff within their building, has been a huge demand for them. So Jack, it's with these types of capabilities right out of the get-go, I'll stop sharing and we can start talking, that we are seeing enormous interest right now from our early adopter market.
Paul, I think that was fascinating. I think it's important for our audience to understand that if you think about technology that goes viral or that really takes off, like YouTube, Instagram, or TikTok, or those platforms, what is the secret ingredient? The secret ingredient is their creator platforms, right? That's the thing that's the common denominator on all of them, right? Like the creator, even Facebook, right? That was like maybe the first big one, right? So now this platform, you can't totally tell because you had Hannah there, but imagine the entire YouTube community, the entire TikTok community adopting this technology. That's what this is, right? It's a creator.
Oh, I get now. I get it. Hold on a second. Wait,
that a little bit, Paul.
So wait. So you're saying that that basically this can go viral because now anybody can create their own map. Let's say, I don't know, in a museum, for example, right? In the Louvre, or in a I don't know, casino, whatever it is.
Yeah.
Huge spaces, right? Places that are 100,000, 1 million square feet. people
Yep.
create their own tours, and with their own comments, and of course that can be monetized with ads, and basically you're doing the same thing like Google.
Yeah, so think about it like this: and correct me if I'm wrong, Paul. So a place like a casino, they would own, or a stadium, they would own their map, right? Like, that's a walled garden, right? Like they would basically create a map, and then the experience you have there would be curated by them, right? But outside of that, in the wild, anybody can create a map, right?
Yeah, anybody can. What I just showed you yesterday was produced in 30 to 45 minutes. And there was no coding involved at all. The content was easily dropped in, but you notice most of it was dropping locations and entering text. But the entire platform that we have, and this is why we think it's a phenomenal opportunity, it is truly a no code. So you don't need to know how to cut code. So Niantic, Matterport, and all these other gaming type environments require a pipeline of developers, creators, etc. Here, if you can build a PowerPoint presentation, you can build a real world metaverse experience. And that's phenomenal, absolutely phenomenal. There's zero barrier to anybody being able to create content. And then because you can go into anybody's space and use your phone to create a spatial point cloud, in theory, your TikTok, your YouTube, you can be anywhere now. And you can be beaming in and making any kind of content that you want, and then making it available to your audience. Tell them, go here, experience it.
So somebody, I mean, let's say an influencer, let's say somebody who's got
Yeah.
1 million followers, whatever it is, they can just do a tour. I mean, they can just go in, I don't walk around, Midtown Manhattan, whatever, go and create their own map. And of course, then later on, they can go to the different retailers or whatever, and says, hey, do you want to be a sponsor? Then they get like, listen, this is just an idea. I'm sure there's people who figure out how to monetize.
Jack, it's going to get bananas. Well, you could be a celebrity chef.
Yeah.
And you can walk through a grocery store curating exactly what to purchase,
and the brands
can go home, everything.
Oh wow! Everything. And the brands can pay. Like you can have, for example, like I don't know, what? Yeah, any.
So let's be clear. So you have Instagram, which and Facebook. Like Facebook has basically become, I guess it's like families and friends, to like share birthdays, or I don't know, you go on trips or whatever, like that's Facebook. Instagram is kind of a mix of fashion and food, but it's eye candy, lots of pictures, and it's it's that. When you think of TikTok, it's purely entertainment. I mean, that's it, right? It's just entertainment. This is the metaverse platform. This is your metaverse version, spatially mapped, augmented reality version of those platforms, where it can be used for entertainment. You certainly can. It could be used for monetizing with, promotion, right? Like advertisements. It could be a utility, like, hey, I'm an office building and I want, I have like 100 tenants, and I'm always looking to increase my rent. Well, okay, hey, if you rent in my building, you get wayfinding to your office built into your rent, right? Like, it's free.
And this would be for malls, these massive malls. The malls, they need, especially they're very serious. Paul, like what you talk about, the data, the analytics, they go crazy for this, because that's their whole big thing, is like these major operators, like what is it, Simon, whatever it is, these mall operators, all they care about is the analytics, like, because they will kick a store out of the mall if they're not producing a certain amount of revenue, right? They want to know how many people it's passing, how many. This is something that can go crazy with these malls, because they really could. This is something that's right up there. How many malls are there in the world? Like,
so Paul,
well, it's one
big malls like Westfield, Simon.
Can you give us some insight? I know you were talking to some people in the EU. I know you were talking to.
I'll share a bunch of them. Yeah, there's
the early conversations. Just like where people are thinking this can go. That kind of thing.
Yeah, so there's a number of them. So sporting venues, I won't disclose who, but there's a number of large sporting venue operators and teams that are, in very, I'll call it deep discussions with us right now. In the
Late
EU
stage?
specific,
Are they early stage, late stage, or like in the middle
no, they're
stage?
late stage. They're late. Yeah, they're well down the line. And then there's, in the EU, that's fascinating. They've put an entire team together to study these use cases, wayfinding being the principal. And we have 5 active early adopters in that market right now. And the one that I like the most,
football, like soccer, whatever they call it there.
no, these guys are typically business operators or government institutions.
Okay.
I'll give you a very good example. One is a healthcare network in Finland, and a large number of hospitals. And these folks have been doing studies on how do we make traffic flow, patient flow, more efficient, because it takes a lot of, believe it or not, time and money away from staff having to answer questions from aggravated patients. And this is a very well-known issue within the plan market, right? The positioning, okay, there's a whole series of technologies that have been put into these healthcare institutions to abate this problem, because it's a hard cost within the infrastructure of the hospital.
In other words, if you imagine you have nurses, doctors, patients, people in there, they're approaching anybody they see.
Exactly. Hey, they're anxious. You got it. They're anxious. They're
a couple minutes here, a couple minutes there, and it adds up because these people
it adds up hugely.
They're getting paid a lot of money, right?
Yeah. And here's the thing, Jack. When patients show up into these hospitals, they're usually there because they've got a series of tests which require them to go to point A, point B, point C. They're usually across multiple floors, sometimes multiple buildings. And, frankly, they're for many reasons, serious issues. They've got a looming condition that, they're about to get tested for, or they've got to go and get diagnosed. And so they're aggravated. And and these countries are very mobile literate. So for them to open up a phone, click, and then have it wayfind you, not a problem. There's zero barrier to people of all ages being able to do that. So the economics here are substantial. There are tens of thousands of dollars that get saved immediately by people being able to wayfind through AR to their destination. And it's not just one. They can go, okay, I've got my diagnostics for my, this lab and this lab and this lab. It's 2 hours that I'm in the hospital. It just makes that moment in time that much easier for them.
Yeah.
And these are documented. They've been studying this now. So they are very, I'll say, interested and awaiting our release in the coming weeks. And they represent just one of many that are in this space. And we've had some just great response from them. And so you'll see them. We'll develop them into case studies and chat about it over the summer here. But that's a very real, very practical, and from both an economic and a qualitative value proposition, they're solid. And more importantly, no code, fully scalable, there's no barrier, repeatable globally, right? And it's just a perfect use case for the technology.
Exactly. And what I would say is that this is, when we were talking earlier about scale, to scale 3D models and to be able to have, let's say, 100,000 models per month. So could we sign up 100,000 people? Could you make 100,000 maps in a month? Is that something the platform is capable of?
Today, I would say no. Within 30 days, yes. Well, because we're just releasing.
No, I don't mean today. I mean, within once it's released. Yeah, once it's in market. Is that it has that scale? Could it do like 1 million? Is there any limit? I guess is really what I'm saying.
There's no hard limit. In fact, our goal is to incrementally get us to the point where we feel internally we're at that how do I say this without confusing it? Netflix level of scalability. In other words, global deployment. There's no real concern of where you are in the world coming in at the same time. All of that, those issues have been well thought out. I mean, we've been working on this for quite a while, and that's our anticipation, right? Our end state is that this is one of those, just like everybody uses Google Maps and Apple Maps, this we want to be the exact same thing inside a property.
Right. Inside a property, on a campus, wherever you go, everybody's always looking for directions. But you know, the directions piece is exciting, but it really again is just the beginning stage. It's
Yeah.
really all
Yeah.
these add-ons like the holograms of people, of
I think
Oh
products,
yeah.
the
But that's what
advertising.
I'm getting at. That's why it's
people are going
so
to come up with their
disruptive,
own.
dude. Yeah.
I
Uh,
think
and here's the thing, Jack, and what we're building is a templatized portfolio of products that can be essentially drag and dropped into these spatial maps to make it super easy. That's why, you know, I think Paul refers to this as like the PowerPoint of
Right.
spatial mapping, right? Where you could, if you go into, if anyone's ever created a PowerPoint, all the tools are there. You're just kind of point and click, you know, clicking
Yeah.
on different pieces of it, right? To create your PowerPoint. And so if you think of it like a spatial PowerPoint experience, that gets you closer to like what this is. And if you think about the metaverse and you think about, again, back to the glasses again, you
that's
know,
the glasses would make this thing go because
Right.
it makes it much easier rather than having to have the phone. Right?
glasses are coming. The glasses are coming.
Exactly. But
And so,
you know what? I think, look, the reality is that this thing has so many uses that we don't even know how far this can go because, there's users who are going to come up with their own ideas, which are far beyond like anything like we're
Yeah.
even taught. Like, it's going to be like, YouTube started out as cat videos, right? It was cat videos initially. And then we're doing this. Nobody thought about this
Yeah.
or, there's
Yeah.
all this other stuff, right? So it's really things have massive upside. Let's get into some audience questions because we got we're running a little late. I just realized we got people. It's lunchtime, right? People might be, or in the East Coast, it's lunchtime at least, right? So we don't want people to leave. So let's get into audience questions. Let's see if we can catch up here. Okay, so okay. Let's start from the first ones. Okay, this is I guess for Evan. Lowe's just announced they are doing metaverse in their stores. Is that with NexTech?
so, you know, we haven't announced that we're doing business with Lowe's yet. So I can't really speak to that.
Which blue chip clients can you discuss?
Well, we have discussed a lot of blue chip clients. We've discussed Crate and Barrel. We delivered 2,500 models to them. We've discussed Kohl's, who have come back multiple times. They just came back again for another reorder of additional 3D models. We've also discussed Kmart Australia. They just revamped their website in Australia, and they have 500 models. They're now talking about 10xing that. So there's an enormous amount of blue chip customers that we're working with. Some we can talk about. We did kind of mention Napa Auto Parts. I think they're blue chip.
Yeah, it's a huge company, $1 billion
Yeah,
company.
yeah. So they're also a happy customer. There's a lot of business that we're now tackling, and so but I see the Amazon question. So Amazon is outsourcing. So they are outsourcing their 3D models, and so they're definitely working with people outside um, of their business. Let's say.
Okay. Is NexTech's API simple enough to allow easy connectivity to your AR solutions?
I think that means to the map to
No
ARway.
problem.
Yeah. So Paul, can you tackle that?
Yeah. Short answer is yes. So and what's good about it is that, and we'll have versions of this, in the coming weeks to present, but you can easily tie into our ARitize 3D studio and pull down 3D objects. In fact, some of the video that you saw with Hannah walking around, the chair and that gentleman that was there, were all done in the studio, and they're easily brought in and placed. And more to the point, we can actually see who looked at it, how long they looked at it. We can add a hotspot if they want to buy it. Quite a bit of stuff that we can do within that experience natively within the call it the NexTech stack.
I think it's an important question because imagine Kohl's has, let's call it 5,000 3D models with us. Those 3D models can be brought into their store
Yeah.
as part of the ARway wayfinding inside their store. They literally can just put, whatever 3D
Yeah.
models they want in the aisles. As someone's going to the bathroom, they could have a hologram of one of their spokespersons, models standing there wearing some clothing or a couch or whatever. I mean, all of this is going to tie together.
Can you imagine how big this could be? This Maps product, like for example, I was just in a Home Depot like this weekend, right? I was looking for, it's a huge store. Like it's impossible, like, and people are, you're not gonna get that much help. And I think if you have this thing, you can get, it's gonna guide you to where the thing is. But meanwhile, as you're passing, because it has all this data, you can
Right.
sell all sorts of sponsors ads will bombard
Exactly.
you with saying, "Hey, oh, you're buying, I don't know, plumbing. Oh, you need this. So how about this would help you?
Jack,
You're buying paint. How about some?"
that's the perfect use case
Yeah.
to that market that I was trying to illustrate. So you go into Home Depot, they basically can for free try this, right? Take your location that you went into. They can place pins for plumbing, for outdoor, for gardening, yada yada, right? Costs nothing, super easy. They put no infrastructure into the store to do this, right? Then you walk in, you whip out the app. In this case, it could be their app, could be ours, or it could be a white label. They could make up their own. And then basically they just enter plumbing. Comes up, just like you saw with Hannah there, it gives you exactly how far, how many steps, which aisle, and you get chevrons to wayfind you all the way there. And then, so that's just abated the whole travel issue right there. Costs them nothing, no capex, nothing, right, to do that. Then we turn it into a profit center because not only can you walk, but as you're going by there, you could have curated experiences. You could have somebody ask you what they want. You could have promotions come up
Yeah.
against product that they want to move off the shelf. There's all sorts of ways.
It's really, you're really like right at that intersection of like retail, the next generation of retail and
We
everything.
think it's
coming
going to be
together.
very, it's going to be very fundamental.
It's really going to have a
Yeah.
massive impact on
Yeah.
kind of this
Right.
convergence of retail, the metaverse, online.
Yeah.
It's all going to be
Yeah.
this one thing, and you're right at that epicenter, which is
Yep.
I think a
Yeah.
massive.
And
It's a multi-billion-dollar opportunity. There's no question.
The thing about it, Jack, which is so potent, is that it's really the combination of all of our tech which really creates the value. Like, it's nice to have all these templates, yes, but there's an enormous amount of value when a retailer says, okay, we want, our 3D models in this experience. And it could be, a customer, an existing customer where we just, press a button and all the 3D models magically populate. Or it could be a new customer and we have the capability in-house. We are the 3D model factory to make these 3D models on demand. So it's the combination of the two pieces of tech. I mean, a spatial map is great, the wayfinding is great, but when you populate it, Paul, isn't that really where the value creation really begins?
100%. 100%. And that's why we'll completely disrupt, right? So, remember, wayfinding is a cost for most, not most, all properties and even brands paying to get you to that location. Now we make that frictionless, but that's just the start. Now you can add through augmented reality and all these spatial experiences, all the value. And, all of a sudden you've got click-throughs, you've got brand activations, you've got product demonstrations.
Is this
and of
going to
course,
make?
purchasing.
Are you gonna make tour guides obsolete? Because tour guides basically their whole business is they give you the
Well,
information,
Jack,
but then
to
they
your
get
point,
kickbacks from all the stores. They
yeah.
say, "Oh, hey, check out this. This is the best
No,
restaurant."
think about it. No. So they're going to be our customers.
They're actually
Right.
because they're going to make their own tours.
Right. No, those influencers you talked about are going to completely magnify their audience because
Kim Kardashian,
they're going to walk on site, make the tour, and then their audience will follow their tour in that property.
They won't be selling. So think about it. They won't be.
Think of these
They'll be true influencers.
This is the big thing on Instagram.
They won't be selling. So here's the difference. Right now, a tour guide is an hourly guy.
Yeah.
Right? Like, hey, how many hours can I book? How many tours can I book? Okay. There's a limit to how much he can make. The value prop here is once he digitizes or ARtizes, right? He creates this wayfinding touring experience where he turns himself into a hologram, and he's at these geolocation points along this map that he's created. Now all he does every day is sell his map to as many people as possible, right? He pays us a subscription, and he's basically selling, access to his map. And now he could scale. He couldn't scale before.
You know what is?
Right.
I think the huge. I think what's going to really make this move big time is, the big thing in social media is like you have all these like hot girls who are, they're like these travel influencers. They go to these exotic places and then they do video and then I don't know they get kickbacks from they get basically a free trip because I think they make a deal with hotel. It's an epidemic right now of these travel influencers. Can you imagine once they have this? This is like the perfect thing for them because now they're saying, "Hey, here's my tour of whatever," and however they get paid with whatever that becomes. I mean, and they're pushing the product for you. So now you're gonna have like a hot girl who's got like 5 million subscribers, saying, "Hey," on Instagram, saying, and they will have like 10 million or whatever. Like I have no subscribers. They have 100 million subscribers.
Right.
And say, "Hey, check out my tour of Bali, whatever, or my tour of, I don't know,
Jack, maybe
Paris."
Maybe you need to turn yourself into a hot girl so you could get.
I may have to. This is where the world is going.
The 10 million subscribers, and then Paul and I can amplify our message.
Right.
Listen, whatever it takes for the stock, I'm here to help maximize shareholder value. So
Jack, it's a very, very good
extent.
point though, because if you were to try to do what you just described on a Matterport or Niantic, you'd have to have gaming developers, designers, etc. Here, just like the influencer, they know how to use YouTube, they know how to use Instagram. They take a couple of shots, they package it up, and they push it out. There's no coding involved. And this platform, and we know this because of our early adopters, the experiences are perishable. In other words, they're really only useful for a certain period of time. So they're always rebuilding and reusing it. That's the beauty of it.
Yeah.
And Paul, you could use this as a white label platform and or
totally.
SDK, right? So
it's a full-on platform. It has an app, it has a studio, a web studio for massive development, and then an SDK, so you can create an end-to-end pipeline.
I think what's going to, and this is not a joke. I think what's really going to make this like scale and go crazy viral is when you have a couple of these like hot influencer girls, start doing this. It's going to go bananas. Yeah, that's going to become.
What makes you think we don't have that already?
I was going to say, there's, I'll leave the hot girl comment out, but the influencer, 100%.
Oh, okay. Okay, let's get to some audience. Let's get to some more questions. I hope we can cover everything here. So Bart asking, are there any are you planning on getting into partnerships with Meta or Snap?
In the world of spatial, I think it'll be inevitable. Something will happen along those lines. What's interesting is, and again, just within our own network, the partnership discussions that are coming at us are substantial. They're very significant. They're not with Meta nor with Snap, but I sense, given the people we are talking to, that that will eventually occur.
But by the way, just so you know, this is interesting because this is like it's just the way the world works. Like on Twitter, there's we have a couple thousand people. There's there are these girls who do trading tips, whatever it is. They have 100,000 followers, right? So I see today there's one of them posting what the hell is it? I forget what, but she's at some like NFT convention in New York right now, and she gets 500 comments. She's like posts a picture of herself and saying, "Oh, I'm at the." There's like 500 comments. We put up a thing about NexTech. We got 2 comments. So imagine, and she's like, I never even heard of her. I mean, she's like, so imagine her. If she had your thing at that convention, the NFT convention today. She could be, the star of the show, basically.
Well, just a couple of things, Jack. I mean, the reality is that everybody's going to be using this platform, hot girls or not, doesn't really matter. It's going to be athletes. It's going to be movie stars. You're going to be able to see all
Imagine your favorite athlete, whatever it is, at the NFL state, whatever. He like this guy does this tour. Hey, this is where my favorite place to get a beer or whatever it is, and
Yeah.
here's where the merch is,
So,
by the way.
so our experience with the early adopters, at least with NexTech's previous technology, like our AR ties 3D, if you look at 3D models, the people that have been the early adopters have been big box retailers, right? They've been the ones who adopted early and invest early. So that's, Wayfair and IKEA and Target and Howes and, all these big boxes. And so if you think about the people Paul's speaking to, they're all big name companies and entertainment venues and things along those lines that are looking to be the first to market, the early adopters. And we haven't even really talked about, maybe we'll save it for the next, maybe we'll do a full show on NFTs and blockchain and how
Right.
that lends itself to this platform, because it really is a great fit for ARway as well.
Okay, let's
Yeah.
see if we can get we got a bunch more questions coming. Okay, so okay, a bunch of people are asking us, how are you going to be able to handle like a huge influx of orders for the 3D? This is for the next step, the 3D modeling business. Let's say you get the big whale. Can you scale? Can you meet their demand for the 3D
Yeah.
models they need?
So, I mean, we're positioning right now. We are building that capability right now, as discussed earlier. The CAD to poly technology, which we're building, will allow us to scale. So, that we have filed. I see the patent question. We have 5 patents, 5 that have been filed.
How many 3D models can you produce in a month? Goes back to the
Yeah,
ability to scale.
you know, let's put it this way: we flex up and flex down based on demand, right? So we've produced as many as 3,000, but the goal, I mean, again, this is early days. The goal is to get to 10,000 and 20,000 and 100,000 in a month. And to get there requires a significant amount of technology, AI, ML, stuff that we're building right now. So, we can't go. I mean, with our existing tech, we could probably push it to maybe 10 to 20,000 in a month, but that would be, um, let's say, driving a car at 180 miles an hour, right? You're redlining at that point. To be able to get lift off, where you're like a jet going at Mach 3, you need a jet engine, a completely different technology. It's not a car engine. You need a jet engine. We're building that now. It's
Can
not built.
can you scale? Can you get to 100,000 a month models? Well, actually, no, 100,000. I think he's asking a year, 100,000 models, or how much? Like, how fast? How big can you scale this? The 3D model making.
So again, a lot of it is determined by demand. But we're building our jet engine. It's not quite built yet. Right now, we have the ability to deliver on the demand. Like there's right now, we're able to deliver on whatever demand that is in the market. But as that demand increases, we want to continue to be able to deliver, and that's going to happen in 2023.
Okay, interesting point. I guess he's saying, okay, because as companies come into the pipeline, with the test, you have all these brands testing right now. You have more and more, and some of those convert into customers. So,
Exactly.
so
Yeah,
this is
yeah.
just constantly growing. Question here: how about the sheer dilution down the road? I guess he's asking, like, will you need to raise capital? So, is there going to be dilution?
As of today, we're not raising capital. You never know, in terms of what comes down the pipe, but we don't have any plans as of today to raise capital. The goal is, if you look at the spin out of ARway, it's going to be self-funded. And so if we do more spin outs, those companies will be self-funded. We will not have to raise capital because they will be raising capital independent of NexTech. So, that's kind of where we're at right now. We feel good.
Okay. Let's see here. Okay. A question about the AR glasses. I think what the guy's asking is, I think really what he's asking is how much of a difference will that make once the AR glasses hit the market? Is that gonna?
I think it's 100x, Jack. I think it's one of your 100x's. Like it's that big.
But literally this, yeah.
What do you think, Paul? Do
Oh,
you think?
for sure. Yeah. No. I mean, I don't want to put too fine a point on this, but Evan's he's completely on. This is going to change everything. The reason for it is, you're not going like this with your phone and doing stuff. You're basically like this, tap your phone, and now everything's there. And in the real world, you've got a mesh between the physical and the digital seamlessly. And like all tech, it'll come out a little bit, at first, and then it'll go woof. And within 2 years, you'll be like, I can't believe we never had this.
I just realized something. I keep using that Home Depot example because
well, that's a perfect example. You put your glasses on and it'll take you right there.
No, but forget about their employees. If their employees have it, then they know exactly where everything is at any given time, where the inventory, because they can get stuff on their, I guess, messages.
Well, Jack,
this is low. Go here.
With our platform today and glasses, because that's what we're shooting for. I think in an earlier you were going, go where the puck's headed. That's where we're headed, right? In that analogy, that use case, it's perfect. The Home Depot associate will be a hologram that will probably sit outside of that building that will come into your glasses remotely through our platform. You do that right now, beam in and talk to you while you're standing, looking and holding the product. And if you need to, you can tap and the product comes out of the box and materializes. And now you've got a fully assisted sales experience right from the get-go.
Yeah.
No, so things are really cooking. I said, okay, there was a question. I think I can't find that, but there was question on how many shares is somebody going to get of the spin out? If you own 1,000 NexTech, how many shares?
So we've previously announced that NexTech shareholders are going to get 1.6 million spin out shares of ARway for free if you own NexTech, which means if you have 1,000 shares of NexTech, you get 16 shares. Every 10,000 shares is 160 shares. So my thinking, and that's the minimum, right? It could go up. It's possible that NexTech could issue 2 dividends. We could dividend this first piece, and then at some point in the future, we could do a second dividend. And so there's lots of opportunity for investors to participate in ARway through NexTech or through ARway directly once it starts trading.
Okay, so listen, bottom line, I think the takeaway is this: there is, really, this is NexTech. You're doing Web 3.0 right now. I think this is NexTech 3.0, where the new where the company is going right now. It's like you had NexTech 2019, that was like NexTech 1.0. 2020 when we had the acquisitions, that was NexTech 2.0 with and now it's really this is it. This is you got the map spin out happening, the value being created, the 3D modeling business is really starting to accelerate. Pure play now, it's a pure play tech company with margins, and that's, I think, the big thing. I think people apparently this is the big thing, is people now realize, okay, pure play tech at the leading edge of the hottest trends. This is going to be the biggest thing. And I think the market apparently likes what they're hearing. That's why the stock has been climbing. So
yeah, not just the market. So let's be clear, and then we can end it on this: is that our customers are telling us that this is what they want, right? So, we could sit around and pat each other on the back all day long. But at the end of the day, the fact that Kohl's keeps coming back for more, Crate and Barrel, Kmart Australia, all these big brands is amazing. And Paul's having that exact same experience. We haven't announced, all the deals that Paul's lining up, but they are lining up. And, so the point is that the customers ultimately dictate whether we're right or wrong with our predictions on the market. And I think it's fair to say, Paul, and, correct me if I'm wrong, that you're getting a lot of positive feedback from customers.
Oh yeah, yes.
Okay, guys. On this note, thank you for the update, and thank you everybody for the great questions today. It's apparent there's a lot of investor enthusiasm really starting to bubble up for NexTech. I mean, to me, it feels just like November 2019 when the stock started ramping up. On the way to that mega high. Let's see if lightning strikes twice.
Yeah, it's like
It'll be exciting to watch.
Remember 1999, right? I think, right? And now 2019, and now it's 2022.
But and the interesting thing is all those leading edge technologies that everybody thought was hype in the late 90s, all of a sudden it became mainstream. Like the dot-coms, they were all of a sudden a couple of years later, Amazon was on $1, whatever it was, like at the bottom. It was, I don't know how low Amazon got, but it was like, I think it was like $5 or whatever, and then now it's 3,000. All of a sudden people thought it was going to go out of business. There was a real talk that Amazon would be going out of business.
Well, don't forget, Apple was also
another example.
Apple was going bankrupt. So I mean, and don't forget Tesla was going bankrupt.
Yeah.
And don't forget General Motors. I mean,
but the tech companies, it's interesting. All the hottest companies, Amazon, Tesla, Amazon, Tesla, Apple. I mean, Apple was left for dead. I mean, I think the stock was like $1.
I think the key. What's the common denominator? And then again, we got to end this.
This is it. The big technology company.
The common denominator is transformational technology, was trying to be brought to market and developed. Amazon transformed online shopping, right? They start out with books, and now you buy, your underwear there, right? And when you look at Apple, they started out with, I remember it was like a niche platform just for graphic designers, right? And now everyone has an iPhone in their pocket. It's like become ubiquitous. And what was the third one?
We talked about Amazon,
Tesla. Tesla was basically going to go out of business. Nobody thought that they could crack the code. Everybody was saying, like, there's no way that this upstart is going to beat out General Motors and Ford. Like, there's no way on earth that that's going to happen. And there was a huge short position, meaning billions. Yeah. And guess what happened? Now, I'm not saying the same thing's going to happen here, but, history does rhyme.
It's but it really is very similar. All these tech companies, leading edge stuff, and all of a sudden it becomes a reality. And
so that's it. All right, Jack.
Thank you guys.
Thanks,
See you
guys.
the next one.
Thanks, everybody. Talk soon.
Yeah.